So we do have a Bitcoin framework document available, and maybe let's start with that to understand how to even evaluate Bitcoin. I mean, the one question which everyone asks, even I have even I question myself of how do we even evaluate Bitcoin? I understand the tech. Okay, I am enthusiastic about what this tech can achieve. I know they're trying to solve a money problem. It's a store of value, but how do we evaluate it? Same question around how do you evaluate gold? So from at least when we talk about gold, okay, the miners have some earnings. We can understand if the miners will, looking at the miners report, we can find out. But what's the question? How do you evaluate the status or the health of the Bitcoin network, or what's happening on that? So ARK Invest had come up with a framework, and I think we wanted to talk about that framework last week, but we just didn't have time. So thought that's why we postponed it, left it for this week. So my idea was to maybe go through that framework this week around framework to understand Bitcoin as a network, right? So that's one learning that we can do today. Other thing which is also from ARK Invest was recently they released their Big Ideas 2022 report. And I mean, if you are really interested in thinking what ARK Invest is thinking about those 5 groundbreaking tech, this almost 6 hours long video on YouTube, right? But anyway, there's a document also available. So we can go through this, understand what their analysts are thinking about public blockchains, Bitcoin, Ethereum, DeFi, and a decade later. Either things. We can look at the maybe digital asset framework around framework to evaluate Bitcoin, or we can also go through Big Ideas, whichever one. Maybe if time permits, we can go through both. So I want to talk about the blockchain. So you can unmute and we can have a conversation around it. I just want to make sure the 90 minutes that you spend here are useful. And when you go back and say, okay, yeah, I learned something, and it wasn't a waste of time. So, yeah. Okay, so this safety, both are from ARK. So do you want to look at the Bitcoin framework or how to evaluate Bitcoin, at least what their analysts think, or talk about why public blockchains and how it could transform and what's happening in this area? Okay, looks like maybe value Ethereum, Solana on smart contracts. Yeah, so it does talk about Ethereum and Solana as well. All right, so let's look at, so BC, I believe that you talk about specifically around Bitcoin. So let's look at a framework to evaluate Bitcoin. Again, there are multiple, if you try to look for evaluation perspective, there are multiple ways in which different people evaluate Bitcoins. Those analysts which are coming from traditional stock analysis perspective, I would say that tech analysts will still run the same tech analysis on the Bitcoin charts, right? Looking at your simple moving average, looking at your death cross, looking at your golden cross. Means death cross is when your 50-day moving average goes below your 200-day moving average. That's called bearish death cross. And the golden cross is when it reverses, goes above. You could also look at Bollinger Bands, all those 400, 500 technical charts that TAs or technical analysts use on stock charts. A lot of them still use it on the Bitcoin, right? To understand if does Bitcoin follow the similar pattern. However, there is another way to evaluate Bitcoin. Because Bitcoin is public blockchain, Stocks are not public. We don't know what's happening on the stocks. Who is buying the stocks? Is Warren Buffett bought the stocks today? I have no idea. You'll only get to know once in a quarter when Warren Buffett will file his 13D or 13F, whatever. Right? Did company issue new stock? I mean, we don't have that transparency in the general stock world. But because Bitcoin blockchain is open, there is a lot more intelligence that we can derive looking at the data from Bitcoin blockchain. Right? Because this information is not available in real time on the stock side, we then focus on the price action to understand and derive our analysis on what might be happening or could happen to the stock in future. Could use that for Bitcoin, maybe, but there's a lot of different way of looking at Bitcoin is to look at the public blockchain data and then run various analysis on what you see in that data. So that is termed as on-chain data analysis. Now, ARK Invest has presented one sort of a framework for how to analyze various methods or metrics to look at on-chain data to build our thesis around Bitcoin. There are a lot more which are available. There are companies whose job is just to analyze the data on Bitcoin and provide a lot of metrics. Some companies' business model is just that. All they do is run their data analysis on Bitcoin blockchain. Okay. So with that background, let's dive into what ARK Invest have to say. As always, if you have a question, you could unmute yourself. That's fine. Or you could put it in the chat. So, but before we dive into the metrics, let's understand the various levels of a Bitcoin pyramid and how we should evaluate. So at the very base layer, right, there are metrics that will tell us around the network health, right? Bitcoin is a big network. I don't even want to deal with this if I'm not even sure if this network is strong enough, if this network is secure enough, if this network is growing, right? So that's a very bare minimum stuff to look at the health of the Bitcoin as a network. Right? Layer 2 type of analysis, which is for long-term holders and investors, is to look at what the buyers and sellers are doing on this, right? Who is buying? Who's selling it? Are these Warren Buffett or institutional investors buying it? Or are those the retail investors? I'm just trying to equate in terms of what we might think from a stock perspective. Who are the big players in this market? What are they doing? Right? And lastly, for your active manager's perspective. So we'll start with the bottom, because something that everyone who is interested in this economy, and especially on the Bitcoin, should be aware of and should understand from a network perspective. Right? Any basic thesis for me on Bitcoin is based on what I see on the network. Right? It's okay. I think Bitcoin is about 50% down, whatever, or maybe a little less than 50% down from its all-time high. That's fine. That's a price action. What's happening at a network level? That's first thing I want to watch. Then, as an investor, you want to look at the other behavioral pattern. Because this information is available, so why not make use of it? All right. So we'll start looking into this one. And then, this talks about the UTXO-based accounting. Won't get into the details of it. But first one is to look at monetary integrity. Right? Now, this is where Bitcoin differs from a lot of other crypto assets, is they want to focus on being a monetary system. Right? Focus on just being a monetary system for the next world's next financial system. So they're not looking at being a financial instrument or a smart contracts or a settlement layer. The value proposition behind Bitcoin is it's a store of value. This is the best money of the future. So now, if that's the thesis, and that's our thesis of investment, then we need to make sure that the monetary integrity is intact. Right? Next is security. If the network is not secure, then eventually it will not have any value. Right? If anyone can hack it, then you can reverse all the transactions. Then any bad actor, state actor, could control the state of a network, and then turn it to their own advantage. So we got to look at in terms of what's the security of the network. And lastly is there any usage on the network? Now, out of whatever 18,000 coins that we have, first thing I want to look at is, irrespective of Bitcoin or any other, who's using it? What's the usage? What are the problems that the particular crypto asset is trying to solve? If they're trying to solve something, are there enough usage of it? Are there players who are adopting it? If they are trying to solve a financial use case, okay, is there enough adoption? Do they have enough partnerships, etc., etc.? So let's talk about usage. So for now, Bitcoin usage it's a monetary system. It's a store of value. And then we need to look at, okay, what's happening from that front, or from that perspective. Right? So let's dive into that. Looking at a monetary integrity, the Bitcoin protocol has ensured monetary integrity by giving analysts and investors the ability to track total circulating supply and daily issuance, like both shown here. Right? So this is your total circulating supply, the one which is shown in green. Now this is important. Right? How is your circulating supply increasing? Right? It's now compare this with our Fed balance sheet, right? Wherein suddenly the supply has increased by a lot, right? By 60% in a year. Looking at Bitcoin, its circulating supply has been increased at pretty consistent rate. There is no printing out of thin air, as it is in the case of a lot of fiat currencies. The other thing that we look at is, how is it being issued? What's the issuance policy? Today, that is the biggest problem in the fiat currency. We have no control or no idea of how the central banks across the world could devalue whatever you are holding in your bank. The USD or euro or whatever currency we hold, it's if suddenly the supply of that same currency is double in the world, the value of what we hold, the purchasing power of what we hold, is cut into half. So looking at the Bitcoin issuance, we can get an idea around, how is it diluting what I hold? So pretty consistent. Don't care whether it's where the stock price is, whether it's a Bitcoin, whether it's a crypto winter, whether it's a crypto summer, whether it's autumn, whether it's a stock market crash, whether it's a great financial recession, whether it is the biggest bull run in last 10 years in the stock market or economy. Bitcoin supply is oblivious of everything. It's been running like a consistent math formula. No surprises here. No Jerome Powell coming and just opening the printing press and printing billions of dollars. It's run at a pretty consistent supply. And we also know how it's going to behave in future. So looking at this, give us some idea of, has there been any tampering with the core tenets of a monetary system, which is predictable supply? So to look at that, we look at a Bitcoin issuance. I would say it's been holding up ever since it started in 2009. Pretty consistent. Approximately every 4 years, you will see a supply cut in half, the new issuance cut in half, and then stays almost the same per block, then cut in half, stays the same. Now compare this with the from a corporate stock perspective, this could be called as issuance of a new share. How many times are companies raising funds and diluting the shares that you hold? That's what happened in a stock. So suddenly you owning 100 shares, you bought it at $50. Suddenly you realize why your share has gone to $30. Hey, company issued new shares and raised more money. So the value of the shares that you hold in your portfolio has gone down. And that's why market has just pushed down the value of the shares, which is not predictable. We don't know when is company going to do that. But from a Bitcoin perspective, pretty predictable supply, irrespective of what's happening in the rest of the world. So now coming to the security. Is the network secure? Is there enough hash power behind it? So to evaluate that, you look at your Bitcoin hash rate. And by the way, all these, I think these charts, most of them are from a company called Glassnode. So you go to Glassnode, you can look at some of these charts. I think some of them are available for free. Some of them are available with some level of a subscription. But anyway, from a hash rate perspective, it tells us how much of a computing power is behind this network. Because the way any new Bitcoin gets created is because of the miners will race against each other by adding more and more power, and whoever solves the puzzle first, the mathematical puzzle first, whoever finds the nonce first, will get awarded, and a new block is created, and that miner gets the reward from the new block. Right? So more the hash power, it means more and more miners, or the computing power is trying to create the blocks on the Bitcoin. So if anyone else, if a state government or a state actor try to overcome or try to take over the Bitcoin network, they need to have at least more than half of the total hash rate or total computing power, which is currently behind Bitcoin network. So we have seen consistent increase. Of course, there are some blips which will happen, the way miners also get incentivized is if the value of the Bitcoin in a fiat terms, it goes higher. It's a little better for miners because then they can sell their coins that they have generated and use it to fund their operations. Okay. So we saw a little bit blip on 2017-18, have been consistently going higher. We saw one blip here, and this was when the China banned Bitcoin mining. So suddenly we saw that all the miners who went in China, they had to unplug their machines while they find a new home for their Bitcoin mining machines. Most of, I think after the drop from China, many of those miners came to US, Kazakhstan, and get relocated to the rest of the world. So we did see a blip, and since then it's caught up again. It's up more than 100% since then. So even after the China mining ban, we still saw there is not the security of the Bitcoin network wasn't compromised. Right? So hash rate has actually increased by 166% and is again approaching all-time high. All right, next one. If you have any questions, feel free. Otherwise, I'll just go through in terms of various frameworks.
What is hash rate?
Hash rate is, so hash is called as hash is a computing function, and hash rate is defined as how many hashes per second can be solved by this computing power.
So what is a hash then?
Hash is a cryptographic. I would say it's a, again, now this gets into the more of a computing and cryptography. Hash is called, for example, you can take up any text and create a jumbled alpha letter. So let me just publish 256 online.
I think I remember that's some kind of a weak encryption or compression kind of more compression thing.
No,
So I don't really understand it.
the hash is okay. There we go. We can now probably see. Okay, yeah, this is the calculator we have used, right? So SHA-256. If I were to encode anything, encode means if I were to if I have a text which I want to, because Bitcoin will have a bunch of transactions in it, will have some information in it, and that information will be encrypted. Now, so if I were to encrypt this, it'll give me this hash. Okay. Doesn't matter. You change just one letter out of it, it will look completely different. So, or you could actually create a hash of a full book. You can add hundreds of pages and create a hash. It will always, depending on the hashing algorithm that we use, it'll give you a hash. So this is called a hash. Now, when it so when miners try to solve the puzzles, the computing power is denominated in terms of the exahashes, whatever that means, whatever 10 raised to power. What is exahash? I kind of forgot.
It's defined in terms of what hash you said?
It's defined in terms of exahash, EXA. It's like a terahash, gigahash. So one exahash should be, what should be 10 raised to power, how much? So it's a huge number of really computing power. So higher this number, it means more is the computing power that is trying to secure the network. Yeah, exahash means 1 quintillion. So right now is maybe 500 or 600 quintillion hashes per second. So much of a computing power is securing the Bitcoin, is behind the Bitcoin network. So anyone, if I'm a big corporate, I want to take over Bitcoin network, I need to have that much of, at least half of its computing power, which I don't even think whether we have that hardware even available, because we don't even have the mining gear. It doesn't even, those manufacturers don't even have that capacity to produce additional gears at such a, right now. They're all very back ordered. In any case, increasing hash power behind the network means there is more security behind this particular network. Okay. Next is a Bitcoin miner revenue in terms of how the revenue as per a USD that miners are earning. And this actually will basically go in tandem with the Bitcoin price, because if you're tracking it in USD, miners basically generate or get rewarded in a Bitcoin, and depending on what the Bitcoin price is, their revenue will vary. So I don't think this is a great indicator though. So security perspective, looking at hash rate, looking at the issuance, that hey, this is not being diluted, not too many Bitcoins are being created out of thin air, and the circulating supply. Excuse me, someone is calling me. Okay. Right. Now let's look at the other framework around the usage side. Who is using it? Is there a usage continue to grow? One is look at an addresses. Okay. And active addresses. So right now this is active addresses. I think, I don't know if they have total addresses in this or not, or maybe I can look for if they have total addresses. So this shows that the active addresses means there has been some activity on on those addresses. Either there is a coins moving in or out of those addresses. So let me look at total address of Bitcoin, which is this. So total address of Bitcoin, irrespective of price, it means more and more addresses are being created. Now, we could talk about, does that mean so many users are there? May or may not be. One user could create multiple addresses, but the fact that there has been constantly increase in the number of Bitcoin wallets or addresses, it means there has been constant adoption or usage or awareness around Bitcoin. Okay. So from a usage perspective, you can look at total addresses, active addresses. Right? Now, do a little more granular review of these addresses. Right? Now, this will come to, if you look at total addresses, it will tell us, what's is it really concentrated in a few shareholders, or is it concentrated on a widespread base of shareholders? And if you compare it with the company, are there only 100 shareholders, or are there million shareholders? A company like Apple probably would have millions of shareholders, but a very obscure company will have maybe very lesser base of shareholders. So the addresses kind of tell us what's the base of participants in this network. Right? Increase in addresses, it means the growth or the adoption or the of this network is growing. Now, what we don't get on day-to-day basis on the share side is who is actually holding this. Right? We only get to know once the institutional investors, they file their 13D. But on the Bitcoin side, every 10 minutes, we'll get to know who is playing in this market. Right? So now this tells us the cohort of Bitcoin address of the Bitcoin holders. Right? The ones which we see in the red are the addresses which hold more than 10,000 Bitcoins. The one in yellow is between 1,000 to 10,000. The retailers are all below. So now we can clearly see that over a period of time, the increase of smaller players on the network is starting to grow, while the big players, their holdings are slowly reducing. It means there is a distribution of wealth of Bitcoin from the big whales over to the retail one or the smaller players. Every 10 minutes, close to approximately 10 minutes, a new block gets generated and you can figure out what happened. Is it Warren Buffett selling, or is it the retailers selling? Right? We don't have this information in traditional stock market. We have to wait for those SEC filings. Great thing about the public blockchain, everything is transparent. You know the behavior of users every 10 minutes. Now, you having this information, now if we can imagine, if I know on Apple next 10 minutes, Warren Buffett again picked up something, or maybe another institutional investor has bought it, we can derive a lot of intelligence out of it. Unfortunately, in the regular stocks, that info is not available, but on Bitcoin network, that info is available for anyone and everyone to see. It's open. So looking at an address supply distribution, at this, we know, okay, the user base is now broadening out. Still, probably a lot of, majority of the Bitcoin numbers are still held by bigger players. But over time, the base is broadening out. More and more retail or smaller players are getting involved and are holding this. Right? So that's one metric to look at. Next is the transaction volume. Not much transaction happens on Bitcoin because it's not actually meant for a lot of our doing transactions. It's mostly of a store of value. Of course, there are projects happening like Lightning Network, which will enable, as we see more and more growth, we should see a lot more transaction volume on that one. But this tells us around, how much of a volume of transactions happening in Bitcoin. The little bump that we see is probably related to El Salvador declaring Bitcoin as their legal currency. Next one is, okay, so that talks about the count. Next is assessing buyer and seller behavior. From looking at the blockchain, we can find out who are the big players. And then we can also, if we know who are the big players, when I say big players means, okay, it's not who, we don't know who the person behind it, but we know a number or wallet, which is if they're holding 1,000 Bitcoins or 10K Bitcoins, this is maybe an institutional fund. It's maybe a mutual fund, maybe a hedge fund, maybe a diamond hands, not really a retail investor. Now, once we have that information, now we can apply a little more analytics on that to understand how those addresses or buyers or sellers, what's their behavior, what's happening, how in this situation, current situation, if you look at where, hey, Bitcoin has gone down, what, 40%, 50%. Who is panicking? So looking at this, assessing buyer and seller behavior will tell us, for example, those who are selling it, have those been a long-term holders? Or those are selling it are very short-term holders who recently came in Bitcoin, maybe bought it at 60K, now it's down to 40K, or that dismissed, oh, this is crap, this is, it's a tulip bulb, doesn't work for me, I want to get out. Those are the people who are selling it? Or you're seeing some selling coming out from the ones who have been holding the Bitcoin for, let's say, last 6 years? Or are the institutional investors selling it? Now, that can give us more idea around beyond just the price. Hey, is it just a temporary blip because some new players are panicking? Or is it that pretty old and a seasoned player in this ecosystem are also moving and selling? Price is the same, but who is selling could also tell us, is there any, at a network level, should I be concerned about it or not? Yeah. So that's our layer 2 additional metrics. So what are things that we can analyze on, right? So let's look at the first one, which is coin time destroyed. So the coin time destroyed or coin days destroyed is measured as time weighted turnover of Bitcoin. Means the number of Bitcoins transacted within a given period and the time held before transacting. Let's take an example of this. If it's Warren Buffett who bought shares of Apple, held it for 15 years, if he is selling, then the coin time destroyed will be way bigger than if I, who bought an Apple shares 5 years ago or a month ago, and I am selling it because I haven't held it for enough long time. So this does give us an indication around who is selling this. So an increase in coin time destroy means that the holders are moving the coins out of a long-term storage and taking profits. The reasons could be maybe if the stock is at or if the Bitcoin is all-time high, maybe I've held it for quite a long time, I want to take profit. Okay, so I think this data is a little dated. So at approximately 4.5 billion today, the rolling sum of coin days destroyed during the last 365 days depict a healthy bull market. We can see over here in terms of coin years destroyed. Now, although the price has reached a new all-time highs around 2021, the coin year destroyed remains still the same. Means not many long-term holders. When I say long-term, means the ones who have been holding it for really, really long time, they still haven't been selling, even at this price point. Even at this highest price point, if you look at the total number of coins being sold and also multiplied with the time for which they've been held, it's not at all-time high. 2017, it was panic. It was like everyone wants to sell. Those who probably got in at 2014, 15, realized that, oh, this is not going to work, I'm going to sell. Even the holders, the veterans in this network who held their coins for a long time, they also sold off. But compared to what we are seeing today, that situation is different. This does imply that most of the selling pressure is coming from the coins which are pretty new, which have recently moved compared to the rest, which have have recently been transacted, have been recently came into that wallet, and now those are moving out of the wallet. The length that they have stayed in that wallet is less. So it means compare the situation what we saw in 2017 and what we see in 2021 are two different situations. Though looking at the price, it might feel the same because Bitcoin has fallen down, what, 52%, it fell down. But if you peel one layer and look at the behavior of where the selling pressure coming from, which wallets are selling, the situation is, the picture is a little different. And that is why it's important to look at beyond just the numbers to understand what's happening on the network level. So coin time destroyed is one parameter you could look at to understand how to analyze on the Bitcoin side. Next one is on-chain profit and losses. Okay, let's go over there. This tells us the Bitcoin supply in profit and loss. Means, let's look there. This measures the number of outstanding Bitcoin with profit or loss relative to their last transaction. Say I bought this Bitcoin at 40K and today it is at 35K. So it means it is at loss. Someone would have bought a Bitcoin at 20K and that wallet is still in profit because today Bitcoin is at 35K. So this chart tells us the Bitcoin, the overall profits, and there could be wallets which are in loss, like my wallet. So what's the overall Bitcoin supply, circulating supply, and how much of them are in profit versus loss? It means, and we have seen that if the quantity of Bitcoins at a loss tends to surpass the quantity of Bitcoins as a profit, that tells us that, at least looking at the past behavior, that gives some indication that it's a market is now probably bottoming out. And after that, you see some run up in the price. We saw the same thing here. Bottomed out. In this case, the Bitcoins that were circulating, most of them were in losses because the price was going down. But once it crossed over the overall Bitcoin circulating in profits, that gives some indication maybe this has bottomed out here. We have seen it 3 times. So looking at this number, the circulation of Bitcoins, how many of them are in profit or loss, can give us some indication about how the market is playing. Again, nowhere we have talked about the pricing yet, but these on-chain data, on-chain metrics, I find this pretty fascinating. Unfortunately, we don't see it in our regular markets because we don't have this information. But on the Bitcoin, because this information is available, a lot of intelligence can be drawn from it. These are just few of them. There are probably 100 metrics which a lot of analysts will look at. And I think this industry is still just growing. We are all learning in terms of what could be the better indicators. Next one is a realized capitalization. When the market cap aggregates, while market cap aggregates the value of all Bitcoin in circulation at the current prices, realized cap is their average cost basis, valuing each Bitcoin at the price of its last movement. Whenever market cap drops below realized cap, the overall Bitcoin market is selling at a loss. It means there's a capitulation. Even though the Bitcoin I'm holding is at a loss, I just want to get out of it. I have had enough. I don't want to deal with Bitcoin anymore. That's a capitulating behavior. So this could tell us in terms of what's happening, right? Are the holders capitulating? We saw 3 instances, 2012, 15, 16, this 18, 19, and then again around here. One more metric to look at is there a capitulation in market? Are people becoming desperate that they now want to, at an aggregate level, right? If the most of the transaction is happening at a loss, it means everyone wants to get out and are willing to sell or willing to get out at loss. So that could denote a capitulation. Thermocapitulation, I have no idea what that is, but let's read through it. What does it say? Thermocapitalization is total USD value of coins paid to miners for validating transaction and securing the Bitcoin network. Like Bitcoin's market cap during past 12 years, thermocapitalization has increased, albeit at a decreasing rate, thanks to the logarithmic increase in the Bitcoin total supply. As indicated, thermocapitalization around 33 billion, nearly 97% below the market cap and 93% below its realized cap. That illustrates that miners no longer dominate natural seller. So most of the selling is not coming from miners. So looks like it doesn't give any clear signal anyway. Do you find this fascinating, or is it probably not work? Maybe I'll go back and look at Bollinger Bands or moving day average and see when 50-day crosses 200-day. What's your opinion around these on-chain metrics? I know this is an entirely new field.
It's a little above me. I'm just so new to this.
Any other thoughts around this? It gets exploded earlier. I mean, there are kids who probably making tons of money just by doing analysis, and now got maybe close to 1 million followers on Twitter. Even the hedge fund followers, or hedge fund managers, and the Jack Dorseys of the world, they basically follow that kid who just spend many years in last year or two on just doing on-chain analysis.
Where can you find all these on-chain metrics?
Sorry?
Where can you find data about all these on-chain metrics?
So if you're a software developer, again, Bitcoin is an open source, you can always run your own Bitcoin node. When I say run your Bitcoin node means you will have the whole history of every transaction ever done in Bitcoin. Right? So you have all the data. Now you can run whatever type of analysis you want to. Right? Now, as I was saying earlier, because not everyone is a data analyst, not everyone is technical to actually run a Bitcoin node, to have download all the transactions and run their own analysis on it. So there are companies who provide some of these metrics. So one of them is Glassnode, right? Glassnode. There is Dune Analytics. I think these two are pretty famous ones.
Wait, what was the first one?
First one is Glassnode, right? So let's say we go to Glassnode and let's look at the, okay. So
because these things are like so completely different from like what the usual financial metrics are, right? Like
exactly.
Average.
Yeah, because in a traditional financial metric, we don't have this information available. I don't know who is buying the stock. I don't know if it's an institutional investor who bought the stock today. I'll get to know it maybe, after they buy a particular threshold and when they have to file SEC, file it with the SEC. Bitcoin, we know it every 10 minutes. Once a block is created, it's open. So let's looking at this, right? Active addresses, total active addresses with non-zero balances. So these do tell us that there's been a more and more interest, and the addresses with at least some Bitcoin has been increasing. Those addresses have been increasing. Addresses with balance greater than, say, 1 Bitcoin. So Glassnode is one company, and I think there are some metrics which are available for free. For some metrics, you might have to pay for it. You'll have to pay for it, not mine. So they have a different tiers. So you have T1, T2, T3 tiers. So there is a different.
Can I ask a silly question?
Sure.
So like when you talk about addresses, do you mean like the address of the wallet? Because let's say I'm on KuCoin, right? And then I buy a Bitcoin on KuCoin. So then that wallet address, is it reflected here or is not actually reflected here, but really it's the KuCoin's address that holds everyone's kind of
So there are metrics which will talk about entity adjusted metrics. So for example, some of these companies, they do keep track of exchange wallets, right? Looking at a past behavior, they know that these wallets belong to exchanges. So they will flush those out. So there are metrics which says entity adjusted metrics, in which then you'll see that the Coinbases of the world or KuCoins of the world or Binance of the world, those addresses have been excluded from there. So
they're not in this graph.
I'm not sure if this is adjusted for that or not. Maybe if there is a little more explanation around that, we can check out.
Because I would imagine like most people buy it from exchanges, right?
Yeah. So it is possible that most of these 10Ks probably belong to some exchanges if it is not adjusted for it. But all I'm saying is there are metrics available, may not be on Glassnode, but like I said, there are many companies who provide a lot of metrics. So there is metrics available which adjust for these big entities, the known entities that we already know of. So
it's actually hard to sometimes though to figure out who these people are. Like we
don't know who the people are. That is true. We don't know who the people are.
Yeah, so we run a lot of analytics on our lending platform, and we it's pretty hard to identify who they are. I mean, I mean, it's like we saw somebody taking out $200 million worth of liquidity, right, from the pool. Be nice to know, right? Like the actual person. Like we were speculating, like, is that Justin Sun? Is it Pantera? Is it Three Arrows Capital? Right? So like it's all, you can always speculate, but like I would love to talk to whoever like took out 250 million from our platform,
Yeah, I mean,
right?
that,
Or put in like 500 million. Like that's
yeah, well,
half a
that's where the
billion, right?
privacy comes in, right? Hey, I can do
I
what I
mean,
want.
it'd be pretty nice to
Yeah.
know like what
Okay.
they're looking for. But it's yeah, you can't get that information. It's very hard.
Yeah, you
Um,
can, you don't know who the person behind it, but all you know is there's some big player. And I think that information itself is pretty valuable. That metadata saying it's a big player who is buying it or who is selling it itself is valuable, irrespective of whether it's Bill Ackman who's selling or whether it's a Carl Icahn selling. All I know is some hedge fund manager has sold this or who has bought it. That information itself, I feel, is a valuable. I think that's what this whole analytics is based on. We
yeah,
don't
half
know
a billion is probably institutional, probably, right?
Yeah, exactly.
More
Yeah.
or less.
It won't be me. If someone has moved 10,000, it's not someone from a retail side, right? It's some institution who's playing here.
Right.
So that
right.
information is pretty interesting. So there are tons of metrics which are available, right? This is only talking about addresses. A lot of other, there is a distribution. Oh, we already looked at this. So entities. Okay, so I think we were talking about, entities, active entities. I don't know what, okay, exchange balance. This is another metric a lot of folks look at in terms of how much is a balance on the exchanges. So generally, again, this is thought process is that if I were to sell anything, if I were to sell the coins that maybe I'm holding in my own wallet, the users will move it to the exchange and then sell it. So if we see a lot of coins moving onto exchange, it does denote some selling pressure. Maybe everyone wants to sell it and hence are taking the coins out of their cold storage and moving onto the exchange so that they can sell it. If I'm just a long-term holder, I don't care about the price, where it's going tomorrow, month, 2 months later, 6 months later. I just want to make sure that the asset I have bought is secure. I don't want to leave it on exchange. I'll move it to my cold storage. So if the balances on the exchange go down, it does tell that it means more employers are just turning into the long term because they have no intent of selling it. That's why they don't want to keep it on exchange. Again, this is a human behavior, but if you know this information, you can try to figure out what's happening in the market. So there are tons of metrics, but the biggest question is, which one you should focus on. Different analysts, I look at their focus on a different metrics. So I thought maybe we'll go through what ARK Invests has put forth. So that was the intent, but there are tons of information available around this. Maybe just look at a few more. We probably get back to the document later. Is what's this under institutions? Okay, this talks about the various the mutual funds or the ETFs. How much money is flowing into that ETF? What's the total ETF holding of this purpose? Bitcoin is this is the Canadian, I guess. This was the Canadian one. So when it was launched last year, since then they saw some growth, and those ETF holders, looks like in the recent volatility, those ETF holders haven't sold. In fact, there is more buying happening through that ETF in Canada because the total number of Bitcoins that they hold, that ETF hold, has gone up. Whereas the price has gone down. Of course, over the last month, it's stagnant. Means the Canadian investors who have bought these ETFs are not rushing to sell their ETF. Right? Similarly, we can look at the other institutes and funds and see what they are holding. Again, how we can get it? Information is public. All that information is available to us. I don't even know what this means. A lot of this stuff, short-term holder profit loss ratio. Oh, this is T3. I don't have access to this. Now this is market value realized value ratio. Like any indicators on charts, same is the case here. We got to spend some time to understand how this works. Now let's look at a Lightning Network, right? Lightning Network is what is will enable payments on Bitcoin. Today, one of the biggest, so Bitcoin has just become a store of value and not a transactional asset, is because it's slow. I don't want to wait for 10 minutes for the transaction to be processed. So the solution is Lightning Network. But is there anything happening on Lightning Network? Or is that dead? Is that project still alive? That we can look at in terms of looking at the growth in the Lightning Network capacity. So while we see this so-called crypto winter, I'm like, I think there is still a lot of innovation and continues to happen. And on the Bitcoin side, the capacity on the Lightning networks continues to increase. The number of nodes on the Lightning network continues to increase. So the adoption of Bitcoin blockchain as a payment network, wherever it is happening, that's happening in El Salvador, etc., is continuing to increase. A lot more to go, but I don't see any dip in that. Again, on-chain metrics will tell us the price of Bitcoin, won't tell us what's happening on the technological advancements or the adoption side. So that was the purpose.
What are the apps on?
Sorry, go ahead.
What are the apps on Lightning Network? Because what I read online is that it's not really widely used.
It's not used in US. So unfortunately, we can't even use in US. I mean, you can use it, but because of the taxation problem, right? But it is used around in El Salvador or wherever you want to pay using Bitcoin. Paying using Bitcoin, using the Bitcoin base layer, means you have to wait until the block is mined to get the transaction confirmation, which will take 10 minutes. So that's where we have this L2 layer 2 solution of a Lightning network in which the transactions happen as fast as you swipe your card. So there are, I think Strike is a company. If you download Strike wallet and
Strike, STRIKE.
Yes.
Strike.
So Jack Mahler's company, right? So they enabled the whole El Salvador to start using, a Bitcoin, or to use Bitcoin payments. They use a Lightning network. So you can use Strike if you want to, pay to a merchant who is accepting Bitcoin, but you want the transactions to happen quickly and not wait for 10 minutes. Right? In some countries wherein this is not considered as an asset, that it's considered as a currency, where you don't have to keep track of your transactions for taxation perspective, you could go ahead and use Bitcoin Lightning Network and buy a coffee. By the time barista is just swiping up or finishing the receipt, your transaction has already gone through. So this is more around the payments or doing payments on the Bitcoin network. Again, lot more to go. But work has been happening on Lightning Network for, I think, last 5-6 years. It's only in last 2 years, the more nodes started to come up online, and more the Bitcoin was being connected, or I would say the logged into the channels on the Lightning Network. Yeah, so these are some of the on-chain metrics that we could look at. Again, my idea was to just give an idea of there's a lot more stuff beyond just the price and the traditional metrics when it comes to Bitcoin, or I would say when it comes to any other public blockchain. but this is the biggest one. So there is a lot of analysts or companies whose job is just to create analytics based on what we are seeing on the Bitcoin network. And on this one talks about the Bitcoin Hoddle waves. Who are the ones holding more than 7 years? Let me just go through that. Yeah, this will. The 1 week Hoddle wave, for example, measures the percentage of Bitcoin that transacted during the last week. The 1 to 2 year Hoddle wave measures the percentage of Bitcoin that transacted between 1 and 2 years ago. So this will tell us in terms of where the Bitcoins, what's the age of Bitcoins that have been transacting. Again, we can derive some intelligence out of it. Then comes the third layer of, so this was all about user behavior. When it comes to behavior means, are you a long-term holder? Are you a short-term holder? Paper holder? Are you Warren Buffett? Are you a Robinhood investor? Are you a person like me? When did you get into Bitcoin? Did you buy it recently? Is the Bitcoin which I'm transacting, is it in profit or not? Now, the third one is more around similar to how we evaluate companies is enterprise value to Ebitda. Now, this comes more onto market value, realized value ratios and all that. I don't know if there's more interest to go through this or not. But I hope this gives you some idea around or introduces you to the concept of on-chain metrics, which apply only to this blockchain economy. That this kind of a metrics analysis is not applicable to our regular stocks. If you want, you can do a lot of study. I mean, on a YouTube, Glassnode puts out a lot of videos around how you should, analyze each one of these ratios. Of course, they want to make sure more and more people subscribe to their service. So want to make it easier for more and more users to understand it. But I find it very fascinating. Haven't been able to spend much time, but if I were, because I'm generally not interested in the so-called the regular tech analysis, I focus more around the fundamentals. When I evaluate company, tech is for a short-term, for determining my short-term actions. So I haven't been paying attention to it, but I think this on-chain metrics analysis, it is interesting. So James has shared something.
Oh, is that at glassnode.com? Is that what?
Yeah, that was a glassnode.com.
Okay.
Maker burn.
Yeah, so this is the biggest stable coin in the Ethereum ecosystem, which is DAI.
This is Maker DAI?
Yeah, and
Okay.
this dashboard is put together using on-chain metrics. I assume this is using the graph.
Okay.
And what it shows is, like, for example, there's the annual profit estimate, which is based on all the current interest rates set by governance. And from that, and from the total DAI supply, you can see how much money it's actually making. And the protocol is making that much money, and the current share price or the Maker token price is 1786. So from that, you can calculate the PE, and the PE is around 11.49.
Yeah. Oh.
So that's pretty interesting, right? That this kind of on-chain stuff that enables you to be able to calculate like how much revenue it's actually making. So this isn't just on paper. This is actual profit, and this profit can be controlled by adjusting interest rates. So this is an example of like actual revenue earned by a DeFi protocol.
Yeah, absolutely. And the beauty of this thing is, this is open. Anyone can do it. If you have the chops to do this, anyone can do it. I see a question from Ramesh. Could this be used by government to catch guys who ask for ransom? It's always used. So there's one company, Chain Analysis, whose job is just this crypto investigation tool. So remember that Colonial Pipeline hack? That when that hack happened, when the ransom was paid to the hackers, they moved to a wallet which was in an exchange which is in US. FBI just sees that that wallet. The law enforcement is all over this place. So it is much easier to launder money using cash than to launder it using Bitcoin. It's way easier to track on Bitcoin than to track where the suitcase full of cash is gone. So, I find it, the argument that Bitcoin is for money laundering, I find it very funny because, hey, it's open, anyone can see it. And governments are doing it. The reason why FBI was able to seize those more than half of the Bitcoin have been recovered, because they just looked at, they reached out to the companies or the exchanges saying, seize that wallet. And if the hackers want to convert into the crypto and that exchange has done KYC, then you know exactly who is funding, who is behind the hack. So this reminds me of other hack which happened around I think it was Poly Network, $600 million hack on the DeFi. And once that hack was, once that hack happened, all the community and the analysts, they started tracing where all the funds are moving to. And they kind of, I think eventually they found out that it moved to an exchange, to a wallet where the KYC was done or something like that. And then because once it got traced, and then hacker kind of, he knew he will get caught, or I don't know if it's a poly or something else. So he eventually returned all the money. It is very easy to track if it's a public blockchain. So yeah, the government is all over this. So there are fans of chain analysis, there are detractors of chain analysis, because they say, hey, the whole idea was a privacy, etc. And now chain analysis is all over the place trying to figure out where, how the money is moving around. So all law enforcement companies, they work with chain analysis, and there are other ones. I think Elliptical, there's another company which works into the similar concept like chain analysis.
I guess for like normal people without like financial or technical background, it's quite difficult to say ascertain what the charts are telling us, right? So are there like reports that like retail average people that can read on that talk about chain analysis? Like where can I find them specifically?
So I think that there are probably documentation around for analyze. So let me make sure I get your question right. So was the question related to how do you understand these metrics? Because for a common person, very difficult to understand.
Yeah, for me.
Okay, I think maybe Glassnode probably will maybe have some videos or maybe resources, documentation. They'll probably have some YouTube videos around this on what each of these metrics mean. And yeah, again, I think on a YouTube, you could actually find out what these metrics means. And in fact, they also come up every week. An analyst from Glassnode, they'll come up and talk about, no, where's that Glassnode?
Do you guys watch Coin Bureau? Because I don't know if it's good. I've been watching it a lot.
Yeah, so
yeah, that one's good.
The Coin Bureau is good. I mean, to get an information at an overall level, at a summary level, Coin Bureau is good. I find it impartial. It's no, stealing of any coins, nothing going to move. So that's why I like it. Otherwise, many of them will be just talking about why this thing will go to moon. So for example, this Glassnode, they'll talk about the various, these assets or these metrics. So spend time on this thing. Information is all available.
Thank you.
The beauty of this thing is it's because everything is open, right? So if you want to do it, you can actually do it. So it's like you may not know how to do it now, but if you're willing to learn, at least you have a chance, right? It's like traditional finance. Even if you wanted to do it, there's just you couldn't,
Yeah,
right? Like
exactly.
there's no way to get that information unless you're on the inside, right? But in DeFi or like this open finance, like anybody can do it. So it's just a matter of, are you willing to put in the time, or are you going to trust somebody else, right? I mean, you only have two options: either you trust somebody else, or you put in the time, right? There's really, and it's like pros and cons of. I mean, if you don't have time to do it, then you can always read some reports, but just be mindful that when you read these reports, things could be massaged and right to kind of paint like a narrative or something. So
so
That's
net
true,
is
that's
the
true.
database is available. They given it to us. Now, can we do something with that data or not? Is limited by our own imagination and our capability.
That's true.
Yeah.
Okay, thank you.
Yeah. I mean, irrespective of whether I'll do it or not, but I find these metrics pretty fascinating. Than the traditional chart patterns. I mean, this tells us something which is not available if you look at the traditional chart patterns. So I find this very fascinating. I have still a long way to understand what does all these things mean, but I think at least the layer 2, I got pretty much handle on, okay, what does these metrics mean? But level 3 or layer 3, gotta spend more time in understanding it. So that's around framework of Bitcoin evaluation. I think people generally have a question on how do I know what's happening here? Now you know one way to look at various metrics to understand what's happening on Bitcoin. And should I be concerned or should I be not? Apart from price, some of these metrics can give you that guidance. Because we are on ARK Invest, I also saw a report from ARK Invest. Like I was telling earlier, their big ideas report. So for trust, we can go through that, but I'm open to having any other discussion, any other crypto project you want to explore or came across anything new. Personally, I am trying to focus more on a fewer number of projects and not spread myself too thin.
Can you do a deep dive on DAOs one week?
DAOs.
I don't understand them.
That's the newest one. And I know this was my weak point when I actually also reviewed the Missouri yearly report. I'm like, this stuff is a little over my head in terms of all what's happening on the DAO. So yeah, looks like I'll have to push myself on to understand DAOs. Yeah, that's one area where I haven't spent much time because that's the newest one and a lot of stuff happening around these DAOs. But surprisingly, after the initial what is the DAO which tried to buy Constitution, the name was Constitution DAO. And that was the first time when a group of crypto holders got together, quickly formed the DAO and tried to compete in an auction. But looks like this idea has caught up. Yesterday before, I saw another DAO coming up, tried to buy some artifacts from a South Korean museum because the museum otherwise will shut down because they don't have funds to operate. So they were selling some artifacts, and it went through the similar process of someone created a DAO to, compete against the millionaires and buy those museum artifacts. I didn't look into the detail, but I was like, okay, it is happening. That was the first Constitution DAO was the first one, but I think many more DAOs for a different use cases are coming up. In fact, I also read about some DAO around VC investing. That if I want to be an LP for VC, I don't have that money. I can't be. They need minimum whatever $5 million. But I think there is a one DAO. Again, some folks have come together to create a DAO and allow anyone to become an LP or participate in a VC fund. Again, too many things. Multi-chain staking aggregation. So let me just
so basically, like, I came across this company because my friend was hiring for this company, and so he asked me to take a look at it. But when I opened the website, I could not understand like some of the concepts that they were talking about. So this is based in Singapore. Like, I'm based in Singapore, and like this is about multi-chain staking aggregation platform, and the users are able to stake their tokens in the staking pool to mine tokens. I don't quite understand what this project does.
So is it just like a yield farming?
No,
I mean, there are.
You click at the Kiki Finance. It's like they do. I put in the chat as well. Like, they do staking, farming.
Okay, staking farms.
Oh man, Certic did the audit. Yeah, that's not good.
Oh,
Certic is not
auditor?
a reputable auditor. I mean, they yeah, no. So Certic, Peck Shield, and Hacken, those aren't good.
Oh, the
bottom of the barrel for sure. But I mean, it's better than nothing, right? Better than nothing. So it's hard to get a reputable auditor. We're going through an audit right now. Man, it's like they're expensive and hard to get. Like, you schedule like a year in advance, and they're like, they don't even want to do it, to be honest. You like pay them $1,000 an hour, they don't even want to do it. So yeah, it's crazy.
Okay, so looks like this is basically farming, staking and farming. So so concept of staking is easier. This is like our fixed deposit or your certificate deposit. You deposit these coins and then you earn an interest on it. It could be, I think Lunite says its APR is 23.55%, AKT is 128, whatever that percent is. This seems pretty interesting. APR is 43%. If you stake DOT with them, you're basically being paid 43%, annualized 43% interest on the DOTs that you have staked.
But is there interest in the platform token?
Oh, I don't know. I mean, we'll have to look into it. Whether do they allow? I mean, will they pay interest in DOT, or will they pay interest in this? Because I'm not interested. I don't know if I'll be interested in the platform token. So
because usually with staking, the platform has to serve a purpose, right? It's usually, if it's only staking, then the question is where the revenue is coming from. Usually, if it's like a DEX, like a decentralized exchange, or maybe a lending protocol where there's like lending and borrowing, or maybe it's like options or something. Usually there is a purpose, and then on top of that, there's farming and staking, which is
where the money goes to, right?
It's to promote liquidity usually, because without liquidity, DeFi just doesn't work, right? And in order to get liquidity, you got to offer something, right? I mean, there is a lot of competition for liquidity, so and that's usually what the liquidity mining stuff is for, is to attract a certain level of liquidity so that your platform can at least function. Like otherwise, there's going to be too much slippage, right? But when you trade or slippage when you borrow and lend, so it just doesn't work without liquidity.
By the way, I see like
But
on
what is-
Luna, it says 0.06% daily. Oh, that's 0.06%, not 0.06 of the balance. Okay, I was thinking because if it was 6% daily, it's in, can't be 23% annually, but it's 0.06%, not 0.06 of the balance. Sorry to interrupt you there.
Mm.
Yeah, that's
but
fine
what's
because
most-
the APR, if you look at the APR, right, the first question you got to ask yourself is if you're making 120% or 40%, so somebody has to be
Pay
like,
you more
where
than
is
that.
that coming from, right? Like
Yeah.
that somebody needs to pay more than that um, in order for that to sustain. Like if you're lending at 40%, somebody has to borrow at more than 40%, right?
Yeah.
I mean,
Yeah.
so where is that revenue coming from? It's good to track down that revenue and see if it's legit. You might be able to read the contracts if you want. That's one way to see how they're achieving that.
Now, what do
Right.
you mean when you say the contract? What is that?
So
Yeah, where's the contract?
these are usually driven by smart contracts. Just look around. Do they have a link?
I don't know if
to-
it's open source Kiki Finance. Let's try to search for Kiki.
Well, if you interact with it, I'm not telling you to interact with it, but like you can see their contracts usually. Oh, that's pretty light.
What?
Okay.
You on the repo?
That is let's see, go in there. Let's see, contracts.
So where's the contracts?
Okay, so farm vault.
Token.
So the token is probably their ERC20, like Kiki token. That's probably their token contract.
Yeah.
And then these are the farms. Yeah, these are probably the farms, and the vaults are probably where you lock. Oh, master chef. So that's copy pasta from like a.
Shit.
That's like most most DeFi farms use this particular structure.
Is it all copy paste off Uniswap?
I don't think it's Uniswap. I don't think this is a DEX.
Oh, this is not. Oh, sorry, this is not a DEX yet.
I don't think so. It doesn't look like a DEX.
Yeah.
But like you can you go back to can you go to that
Oh
smart
my god,
contract,
just
the
copy
main
paste
repo?
it.
The main repo,
Shit.
and then go to the hard hat config.js. That's the hard hat. That's their hard hat config. Hard hat is a ETH development. See if you can find the deployment address maybe somewhere in there. I could look. I can look too. What is it called? Kiki Finance?
Kiki Finance, yeah.
Okay, let me see if I can dig up more info on them.
Now we are getting into the weeds, which is great.
Oh god, thanks guys.
No problem. I
This is
mean,
interesting.
I
I
do this for I do this for a living, so
Yeah.
this isn't
Test, ESP
too
test,
out of place for me.
test.
My friend wants me to join in.
Yeah, I mean, if we understand this, it's important to get behind it to see what they're doing. I mean, everyone has a fancy website, especially the APRs which are too good to be true. I'm generally very scared of that. And also we need to understand what are they paying these APR in. Like I think James mentioned, are they paying in their own tokens? Then that's just an inflation. You know, they can generate all those tokens from the thin, out of a thin air and pay you. But what's it really worth? It could become worthless any point of a time. If I really am staking DOT, I want them to pay me 43% back in DOT. Then I'm interested. I'm not interested in getting a Kiki coin or whatever the token. So.
Yeah, and also another thing when you look at these contracts is that you want to know if the contracts how if it's like upgradable or if something they can change. Like a lot of these contracts they can just upgrade. Here's their contract. I think at least the mining contract. Yeah, so it's ownable. So we don't know who the owner is. That's the first red flag, right? So somebody owns this contract, and could be the team, could be multi-sig, right?
Okay.
And if the owner can make changes, you can look at like how many functions they have that like there's the only owner, like the only owner modifier. So any function that has this particular modifier uh, can only be called by the owner of the contract. So usually these functions are like withdraw everything from the
Ah,
contract or something, some crazy admin type stuff, right? So if the contract
Mm.
has a ton of this stuff and we have no idea who the owner is, usually a red flag. I'm not saying that it's going to rug for sure, but that's not good, right? Typically, if a legitimate DeFi protocol, either the owner is set to zero, address zero, which means nobody owns it. Like Uniswap would be something like that, where it's like very hardcore and nobody owns it. Or the owner is set to governance, where changes would need to go through voting. Right. So if the owner is just somebody's MetaMask, yeah, that's usually not a good sign, right? I'm
How
not
do you see
saying that
that?
the
Did you see
rug
it?
is imminent. Just did I see what?
Do you see like the modifier only tag?
Yeah. That's the
so
so
where
that
that would be,
modifier.
in what under what module would that be in?
Oh, it would be like in any of those contracts they can
Okay.
have that, right? So any contract that inherits from that ownable class can have that function. So I mean the modifier. So
Right.
so
Again, I think
that's
this is really getting into the weeds. Like
Okay, sorry. Okay, thank you.
you were saying, not everyone probably have the capacity. So best ways I am, guess that if it's too good to be true, okay, I'm not greedy. I don't want to put my coins or stake with this thing. That's my general thought process. I would rather stake it with some known entities, even if they are a little bit centralized, like Kraken. I stake some with Kraken because I bought it on Kraken and then I staked that Kraken. Coinbase, unfortunately, I don't think Coinbase has opened the staking yet. And
Wait, Coinbase hasn't done what yet?
staking, where you can,
Oh, they don't do staking. Okay.
yeah, I don't know. And then there are other centralized players in which you can stake either your assets or stable coins, or you can stake your bitcoins with them, which are again, they have a legitimate business need and they have a legitimate revenue stream on where they use it, and still able to give us 5%, 6% on Bitcoin. They're not going to give us 20%, but they'll give us 5% or 6%. And you can choose whether you want to receive that in Bitcoin, you want to receive that in some other coin. But they have a legitimate business. So I would rather be happy with those 5-6% than trying to run after 40%.
yeah. If you want to stake with something like this, then you need to know
Exactly.
like you need to actually read those contracts and make sure like it's not gonna take your money or something.
Yeah.
I
mean, even if I
then
read
it's
the
good if you
contract
have
now,
that
James,
capacity. Then
like you mentioned, if I read the contract now, they're gonna make another update, right? Who knows? So it's like, who's gonna constantly keep track of it?
yeah. If you if you don't, if you're not comfortable keeping track of that, then I don't think it's a good idea.
All right, so I think we hit our mark. Maybe next week, maybe we could go through this around again, this came from Market News. This is pretty new. This is the 2022 report, came out late last week or earlier this week. So it's pretty new, which talks about what their analysts, and ARK Invest has been in Bitcoin for some time before, most of the institutional investors, they came into this whole ecosystem in 2021. But ARK Invest has been in this since maybe I think 2018 or probably earlier than that. So they have a lot of history behind this. So there is another 36-page report around probably Bitcoin, then the blockchain, then talk about a Bitcoin, and they have some very absurd, I would say absurd predictions. I'm not going to talk about those predictions. If you have interest, you can go and look at it. I find it very absurd. But so were the predictions of Tesla hitting $1,000 or $4,000. And then they talk about Ethereum, DeFi, and then finally on the Web3. So maybe we'll spend some time on this one. Yeah, this gives us a whole idea around the overall Web3, blockchain, Bitcoin, Ethereum at a more macro level in terms of what we are seeing right now, what ARK Invest is seeing right now, and what they think could be ahead in next 10 years. So this talks about a decade long path. So maybe we'll spend some time on this one next week. I haven't gone through it, so we'll go through this together, and then maybe around DAO.
Now, what is this website here? Is you were scrolling through this and
oh no, this is a PDF document.
Oh, and what is this from, or what is it?
Oh, this is this is an ETF provider, ARK Investment, ARK Investment. So it's their big ideas for 2022. So they published this report. It talks about a lot of other technologies, talks about the battery, talks about gene editing, but there are a few sections which talks about blockchain, Bitcoin, and
do you have to pay for this, or is this free, or what?
You can download it.
Okay, and what? Let me write. And what exactly? All right, and what's the name of this organization or whatever publication?
ARK Invest, ARK Invest. Just Google for ARK.
ARK.
Yeah.
Investments.
No, invest.
Big oh yeah, there it is. ARK-invest.com. www.arkinvest.com.
I mean, those are in a stock. No ARK Invest. No, pretty much, especially the retail, because a lot of retail investors had piled into the ARK Invest ETFs in 2021, and it was up like 170%. Now it's down 50% because they always have been investing in the technologies of future, and in last 2021 and now all those future high-tech growth companies have been under fire. So they every year they publish their big ideas report. Yeah, so this came in on January 25th. This is pretty new. So maybe we'll spend some time on this one to take a step back at a macro level. Price go up and down. There are a lot of news. There are a lot of FUD going around. I think recently came on. There's another executive order which president is about to sign, which is going to give Treasury Department a free hand to block or basically to take an action on any payment services company without going through the regular judicial process. And I don't know. All I heard is this is being put under the guise of saving America's security, but gives pretty much free hand to Treasury. I mean, I heard about it yesterday. I was about to sleep. I think I was listening to a podcast and there was some reference to it, and then I slept. I don't recall what it exactly was, but there are a lot of stuff.
Big brother at work.
Ramesh, there is also a short ARK PDF. This is going against her. Cool. Good conversation. I think I find this on-chain metrics fascinating, but like I said, There's a lot of learning to be done there. If you find it,
Yeah.
read through it. I find it pretty fascinating. Information is available. A lot of information is available for free. YouTube University is great. You shouldn't have to pay for learning about any of these. Let's go to YouTube.
Is that specifically about cryptocurrency, or is it something broader, or about sort of everything, or what? YouTube University.
No, I'm saying the YouTube is the best university in the world.
Oh, YouTube itself, yes.
Yeah, YouTube. You don't have to pay, and there's tons of
Right, a lot of
information.
great stuff, but also a lot of junk on there too.
Yeah. You have to pick up the right stuff.
Yeah.
Chris, everyone is a genius in bull market. Exactly. I mean, this 2021, everyone, when you get up in the morning, wash your face, you see a Warren Buffett on the other side of the mirror. I got it. I know how the market is going to behave. That happened in 2020. I think a lot of investors would have now realized that's not how the market works. So that's a learning. People are going through that learning.
Oh yeah, a lot of DJs educated me on stable coins when I attended a lot of these meetups. They're like, you have no idea how these stable coins are able to be pegged or something and stuff like that. I don't know. Like everybody pretty much thinks that they know everything there is to know about stable coins in a bull market, right?
By the way, how do stable coin companies make money? Do you guys know?
For the so there's like a ton. I mean, I think stable coins, if you want to talk about stable coins, I think we should spend like pretty much like the entire meetup or something to talk about it. There's a lot to go into when it comes to stable coins, right? But on the surface, for centralized stable coins like Tether and USDT and USDC, the revenue is just from either redemption fees, or from the fact that they are holding on to non-cash or short-term investments with the reserve cash, or in the case of Tether, well, not the fact that they don't even have any cash, but in the case of Tether, they can turn on transfer fees. So in the Tether USDT ERC20 contract, the Ethereum contract, they have an option to put in a transfer fee. So every time somebody transfers Tether, you can take a percentage. They haven't activated that, but it's in there, so they can do it. So that's how centralized stablecoins make money. And for a decentralized stablecoin like something like DAI, there is lending involved. So like when you mint DAI, you put up collateral, you mint DAI, and now you owe some DAI, and that DAI is accruing interest. So that's how the protocol is making money.
I'm pasting an article which talks about how various stable coins, how the stablecoin issuers actually make money. What is the business of stablecoin?
The thing is, stable coins are actually not that complicated, sort of at the core, right? Like it's actually fairly simple. You just the thing that it needs to be able to do is that you trade your cash for stable coin, and then you have to be able to trade it back. It really is that simple, right? And it's always at that price, but the problem is to actually maintain that is difficult, somewhat, right? Yeah, so I would say that's a way to do it. The market making, I mean,
so then the market making activity,
sort of that's arbitrage. That's like because what happens is
spread. That's a bid-ask spread, right? Even if like may not be at $1, but like 0.98, 0.9.
Yeah. So different exchanges can have slightly different prices, so they can arbitrage everything back to $1. The lending,
then the short-term lending. So this paper talks about the fiat-backed stable coins and the crypto-backed stable coins, and how do they make money in both of them, right? So I just put the link over there.
Yeah, so the short-term lending is kind of like holding on to short-term bonds as opposed to cash. That's a way of doing that, right? Now, crypto-backed is like MakerDAO and MIM, Magic Internet Money, right? Abracadabra. That is actually crypto-backed. This is a crypto-backed stablecoin. It doesn't sound like it's legit, but it's actually crypto-backed. And Synthetics is another example of crypto backed. Synthetics is a more hardcore version of crypto backed because it's backed by Synthetics, the token.
The SNX.
SNX, yeah. So it's like it's backed by its own token, right? So that's kind of weird, but it's still crypto backed in the sense.
So what do you mean by crypto backed? I mean, it seems it has to be backed by some asset that you can sell to maintain the
yeah,
value
so
of it.
it's backed by crypto, which you can sell to maintain that peg. So
But
what
they have to have
happens
the money to buy. How do they get the money to buy the crypto?
what do you mean? How do you get money to buy the
Well,
crypto?
I mean, like a traditional currency is backed by, well, by gold or something valuable. So, in this case, you're backing these.
USD is not backed by gold.
USD not buy by anything.
Well, here's the thing, right? So crypto, so for crypto-backed stablecoin, you're always assuming that there is market liquidity for the crypto that's backing it, right? That is an
Yeah.
assumption that
Yeah.
that we're making, right? Which
But
is
they have to own they have to buy the crypto, don't they? I mean, they have to have
oh no
money
no
to
no
buy
no no
the
they
crypto,
don't so the way it works with crypto backed is let's say you want to issue let's say you want to print $100,000 worth of DAI through
Yep.
MakerDAO. You have to put up $140,000 worth of crypto, like Ethereum or Bitcoin. And
Yeah.
that crypto is going to be held in a smart contract. So you can't take that out.
Oh.
And then you get $100,000 worth of DAI, right? Now you can
Yeah.
take the DAI, you can sell it, you can trade it. But in order to get rid of that DAI and reclaim that collateral, you have to pay it off. Like you have to pay off that DAI, right? In order, you have to destroy that DAI. So that's the destruction process to
Wait, I
remove
guess I
DAI
don't
from
follow.
circulation.
So I buy this coin, and then I decide, oh well, oops, I want to get my money back, so I turn it in, and now they have to. So the company has to be able to cash in some of those reserves to pay me back, or to buy coins to to pay me back in, don't they?
No, so with MakerDAO, with these crypto-backed contracts, they don't touch that reserve, right? So it's like
Yeah.
you put it in, it's in there. Like they don't. It's not a company, right? Like when
Yeah.
you give money to a company, they're gonna turn around and use it for whatever, right? A smart contract
Yeah.
doesn't work like that. They will not misappropriate your funds for sure. Like
I mean,
that
it's
is
sort of basically a
verifiable.
banking like thing, isn't it? I mean,
Yeah, it is 100%. No, it's not 100%. 140% reserve banking.
Yeah.
Because you have to put up 140% collateral in order to have 100% debt, right? So it's over collateralized.
Yeah.
What I'm
right.
most scared about these crypto-backed stable coins is if they are backed by their own tokens.
Oh yeah. So
I mean,
Synthetics
once it's entered the
is such an
vicious loop,
example.
it
By
just
own
goes
what,
down
sorry?
to zero.
So Synthetics is an example of a crypto-backed stablecoin that's backed by its own crypto, the token that it's issuing. That's why it requires 800%
Okay.
collateralization.
Yeah,
So
it's a
you need
scary
to. It is super over collateralized because that's the only way to have and even then, I don't think they were able to maintain the peg.
No, the problem. So James, other problem I see in that one is, it's SNX. They could just inflate it away. I mean, they can create how much ever SNX they want to. Just keep increasing the reserve, and that will result in a lot of inflation. If I'm holding SNX, that goes against me. Right?
Yes and no. You cannot print SNX without additional collateral. So that there has to be.
Sorry, what's that?
Like the synthetics
token.
Right.
Yeah.
Okay.
But no. But don't. That's not a good stable coin, right? That has failed multiple times. So I don't use that as a good case study for how to design a stable coin. MakerDAO is decent. It really is. Luna, I don't know. Like Luna, I'm not a fan, to be honest, because I'm not a fan of that mechanism of
But
how it's too
Luna
much
the
hand
stablecoin?
waving,
Luna
right?
has got a lot of attention even
Too
from
much hand waving. Like you should be able to explain the mechanism clearly. There shouldn't be any hand waving when it comes to stable coins. Like if there's hand waving, that's not good, right? Like there has to be 100% clear on how. I mean, it's always easy to get in. It's how to get out.
I mean,
is
I have
when
read earlier about this whole Luna
you can
and
get out.
Terra and how they're trying to interact and generate it. But I mean,
Yeah,
it took me some time. I'm still not entirely clear, but I see a lot of institutional investors getting interested in Terra and Luna.
Yeah, because they can front run retail, right? They can always get out. It's the retail that I'm
Yeah.
worried about, right? Because
So-
right now all these Luna meetups, I worry about these retail investors, but I can't even warn them because nobody likes a Cassandra, right? Who wants to listen to like somebody talking about how there's like potential risk involved in this thing, right? Nobody wants to listen to that. Everybody wants to listen to Luna's going to 1,000 or something. So it's very difficult. But I mean, I don't see like it, you're not the only one who's like not able to actually from my opinion, the only thing that's even remotely keeping Luna's peg right now is the fact that you cannot easily exit the system.
Oh, is it? I thought there
I
was
don't
other
think so.
usage.
Yeah, I don't think it's easy to exit. Like if you had 100 million to like 400 million in there, it would not be easy to get out.
Oh, that's
Like
even
there's
scary if
just
there's
not
much
enough
liquidity.
liquidity.
Yeah, if there's not much of
For you to-
liquidity, then you're just stuck there.
Strange.
yeah,
But
it's not easy.
I thought that the reason why the Luna and Terra generated interest is because they also have another company, right? Some Korean company.
So there's the Anchor protocol that
Yeah,
that is
maintains some peg.
providing 20% yield, which I really think that's kind of
What was
like
that?
almost like a Ponzi in a way. Because they're guaranteeing 20% regardless of how the other side is. When you have lending and borrowing, you can't guarantee the lending interest without even knowing who's going to borrow from the how can you guarantee that? So like so in my opinion, that portion is really risky and a lot of hand waving for sure. I don't know how they can explain away that 20% fixed.
These are the videos I want to stay away from. It's like I hate this. Why you should buy it?
Yeah.
Come on, let me make a decision. You just tell me how exactly it works.
Yeah, how it works.
Explain me that.
right?
I'll figure out if I want to
nobody
buy it or
really
not.
wants to explain like precisely how it works. That's what I like and they're like I don't want to explain because you wouldn't understand or something. Actually, I think I'd be able to understand. Just like let me know, right? Like explain the precise mechanism, because I also deal with lending and borrowing like on a daily basis. So I mean you should be able to.
You're the person
like,
that really don't want
I should be able to understand this. I need to be able to understand this, right? So
But by the way, did you also read the Solana suffered their now what 5th downtime? Again, so they had a recent
Really?
they had
and people
more downtime again.
People couldn't post more collateral to prevent themselves from getting liquidated because the network was down.
Yeah, exactly.
But the liquidation transactions were going through. How's that happen? I mean, in order to liquidate somebody, you gotta send a transaction. So how are those transactions going through, but not the transactions to post collateral? So
I'm scared of all these new projects. Is these centralized ones. I mean, institutional investors made their money. I think Multicoin made tons of money in Solana, and those guys were like pumping up Solana like anything. Now they are behind some other coins, but they got into when it was like less than $1, and all the VCs, they made money. But this is like 6th time in less than a year that this network has stalled.
Yeah.
And
it's so easy to rug on Solana too, because nobody believes in open source apparently on Solana.
Yeah,
so like a smart contract that's not open source just doesn't compute, right? Like how do you even know what it's doing? Like they could just
is
take your
like,
money, right?
What is
Like,
it's not on GitHub? You mean they're
not all,
their
like
code?
most Solana projects are actually not open source.
Oh.
I mean, I do think they have a few open source projects, but not all of them, right? Like Ethereum, every single project is open source. Like that's almost like
Yeah.
a requirement. If you don't open source, you're not getting any liquidity, right?
Mm.
Unless you're Andre Cronje.
Yeah.
Right. But like, yeah, but on Solana, that's not a requirement. Apparently, that's like I was pretty shocked by that. I was like, really? Then how are people putting money in?
And what
That's
scared
crazy.
me more is now because of this whole, I think this NFT, the Board Ape Yachts Club, these all are NFTs based on Solana. And they've taken the whole, people by storm. Everyone is buying those ape images and posting their NFTs as their Twitter profiles. It's a huge business, right? Solana sold around close to, I think, more than $1 billion worth of NFTs have been transacted on Solana. Now, I think OpenSea, which till now have been listing only the NFTs based on the Ethereum blockchain, now starting to consider and list NFTs on Solana blockchain. And I'm like, if this really turns out to be an issue like Solana, if really dies down, it's gonna take the rest of the crypto market. It will cause some jitter in the rest of the crypto market, because now this whole ecosystem has just gone beyond currency or asset for buying and only. It's moved into NFTs. Other exchanges are now trying to list Solanas and all that stuff. So
oh yeah, definitely, it's going to have a huge ripple
it's gonna
effect,
have
and
a-
that
it will have
could
a
be
ripple
the what's going to cause the next bear market, right? Like if Solana, if there's enough concern for like the large liquidity providers to just disappear,
Yeah, the problem is
we're
not
not
just
going to have
this.
any liquidity for anybody to exit.
There will be questions on all other projects, I think, except Bitcoin and Ethereum, because those two, I think everyone understands those are untouchable. Those are pretty safe. Those are the purest forms. All others, doubts will be casted on every other projects like Avalanche and all that, especially the ones which are VC funded. And one really went through the initial process of how the Bitcoin Ethereum originated.
Like I'm okay buying notional token because I work there and I trust. I'm not rugging myself, right? But like the question is all these other projects. How do you
Exactly.
right? Yeah, I mean I'm actually on. I do want to. I mean, since this is kind of we're kind of in a downturn, so I do want to sort of like educate people on how to actually understand these DeFi projects and what they're actually doing, right? And by potentially looking at the contracts and looking at how they're structured, if there's anything fishy, maybe those audit reports. Yeah, I mean, if that's something that I mean, that's also something that you can think about if you want to do something like that, where you can walk everybody through, like maybe some of these more well-known protocols that probably won't rug, because there's nothing more damaging than getting rug pulled in one of these protocols, right?
Right.
Yeah,
so
I
we
mean,
are a
to be
2 hour
honest,
mark, and the great news is our this meeting made some impact. Market is in green. Doesn't matter what happened in an hour or two, but others feel good to close this meeting at a good note. Thank you everyone for joining in.
Vivek, were you saying the top 3 figure is safe, or is just the top 2? I mean, do you include Tether as being one of the safe ones?
No, there are a lot of questions around Tether as well. Tether is a stable coin anyway, but it could lose its pegs if there are the questions around Tether comes out to be true.
If it works.
But Bitcoin, Ethereum are the two ones which I feel are genuine projects. All others could disappear anytime. Is what
really?
I mean. If probably it's too harsh a word, but there are projects. I mean, last week when we reviewed, we looked at an image which talks about the top 20 projects by market cap in 2017 and the top 20 projects by market cap in 2021. A lot of projects are not even there. So right now, Solana is super hot. Who knows what's going to happen after 3-4 years. EOS used to be one top 10. I remember in 2017 talking a lot about EOS, talking about Cosmos. The Cosmos is still now back into in top 20. But it wasn't in 2020. Those were not even there. Right? So there were projects, and this leaderboard will keep on changing. But a couple of them have been consistent. The top 2 have always been this. I mean, there were some which also stayed, but these are the 2 in which I have, these are like apples and the Berkshires. You can buy, again, not a recommended, but it's apples and the Berkshire pretty stable. Not going to disappear after 5 years, 10 years. I don't know what happened to the other projects.
Stable coins were much smaller of a market share back in 2017, and nowadays you can see how much stable coins have grown, right?
Except MegaDAO, I don't think I heard many other stable coins. I mean, USDT was there, but there wasn't much information or talking about stable coins because the DeFi wasn't really a thing at that point of a time.
Mm-hmm. DeFi is what really brought demand when it comes to stable coins. So, yeah.
Could you do like the next one? Could you do something like to bring us through how do we analyze all these little smaller projects and see whether it's kind of like look into the contracts and see if it's something that we can invest in, like go through the whole process.
So I actually don't even look into I don't have a intellectual capability to understand the contract. You need someone like James or engineer or software engineer who understands solidity, etc. But I do go through a process of if I were to evaluate this project, there's a set process that I go through it. I think I covered it earlier times. Maybe throw up a project and maybe we can do it together. We think of a project and we can do it together in our next week in terms of what's the thought process that I follow when I go through any
or maybe send it ahead of time so we can maybe do some prep work.
And
put
me, send me a message on Meetup and I can do some prep work then. Because I have a weekend when I can do it. Like weekdays, depending on the office, will become pretty busy. So you can spend some time over the weekend.
Okay, that'll be great.
All right. Thank you, everyone.